Hi guys, welcome to Investing with JYK, and today we'll talk about LuThai, the company that I mentioned previously in the China B share video. So this is a fairly simple business. It's just a textile company. It makes fabrics and then it makes shirts too. So uh, one thing you have to be cognizant of is these companies typically will write crazy, weird English whenever they do. So if you go to their English website, you see scientific research. Yay! Um, yeah, so and whatever platform innovation for a textile company, and then they have weird these effects. Anyways, the best way to obtain their report, if you try to get there's no investor relations on the English website. So the best way is if you just go to the Shenzhen go to the Shenzhen Stock Exchange website. The disclosure. I think this thing has an English section. Yeah, you can go to like disclosures, and then you can search here. But I'm gonna use the Chinese one because I'm more familiar with it. I get the ticker in Chinese. In China, all the tickers are numbers. And then you choose here's the annual report, and then you could do something like just I'm just gonna read the latest annual report. That's 2017 annual report, and it's published in April 2008. So that's here. I have that open here. Okay, so it is in English because of the historical artifact, I would say, of B shares. It was supposed to be foreigner facing, even though nobody can buy it. Oh, one thing I noticed, a friend told me that if you're in Japan, there are at least two brokerages that you can use to buy China B shares. That's quite crazy because I called Fidelity and they can't trade B shares. I basically just convinced my parents and then my parents-in-law to buy some B shares because I have no accounts in China, unfortunately. Otherwise, I could just be sit there collecting money. So biggest thing so before we delve into it, let's first look at valuation. Right? So what is this company? PB 0.94, PE 8. It's basically no growth, whatever. Dividend yield 6.75%. And if you look at here, this is all wrong. This really should say that dividend in Hong Kong dollars. Here it said dividend in Chinese yuan, and dividend in dollars, and it's clearly wrong because the numbers are exactly the same. They cannot be. So this is I double checked this in Hong Kong dollars, 6.16. The equivalent Chinese yuan should be 5-ish. HKD to CNY should be 5. Yeah, 5.15, something like that. That's what they're gonna pay you. They will pay soon. In fact, they will pay by 29th of June. So in like 8 days, 7 days if you're in China. Actually, no, 27th. So this is the ex-dividend date. This is the recording date. So that's the ex-dividend. This is when they will pay you, basically. So, yeah, very cheap. But is it dying? Not really. So let's look at its annual report. Alright, so first of all, the Chinese accounting standard, the reporting standard, is quite stupid because this whole thing is what? How many pages? 207 pages, but much of that is bullshit. And then they put all the unimportant things first. Like, it's mind-boggling. Like, who cares who the director is? You know, discuss your business. I don't really care because I don't know these people anyways. Like, oh, you know, these people did not show up. They did not review the the report or whatever. It's like, I don't give a crap if it's audited and, you know. Ugh, anyways, see, keeps bullshitting, bullshit, more bullshit. All right, finally, here's some key financial information. But in China, has been a accounting standard change in recently, basically. So they went ahead and restated older amounts in the new standard, and not too much change. You can see their revenue was about 6 billion yuan, and in 2017 it's 6.4 billion yuan. Meh. Net income has grown from 700 million to about 840. Not too bad. And their net cash flow is much higher. If you look at consistently, their net cash flow is actually higher than their net income. So obviously, they will eventually have to replace their machines and whatnot. But this tells you that this company is literally in a cash cow state. And for a cash cow business, as long as it's cheap, bring it on. I mean, this thing's sitting at 8 times. I mean, it was cheaper when I bought it. Was even cheaper at like $8 or something. But if you look at the annual performance, it doesn't look that bad at all. It keeps rising. I mean, the past 3 years has been flat. You know, but if you look at, I think the reason was in 2015 there was a pretty big bull market, so that kind of skewed everything. But if you look at monthly, right, this thing basically just goes straight up. 2007, 2015, 2 big bull markets, and you know, things all go crazy. Yeah, it just kind of just goes straight up. It's fairly simple. They have nothing fancy. They just weave some cloth and then sell them. And the thing I really like about them is they did not go into real estate. I've seen so many Chinese companies going into real estate. It drives me insane. Like, first it tells you how crazy the real estate potentially bubble is. I think it's a bubble, but some people argue otherwise. Secondly, it's like it tells you how the Chinese companies would just go into a sector that they have no particular competitive advantage in. Right? If you're a clothing company or a textile company, what advantage do you have in building a house? Nothing. And yeah, and I've seen like toll roads going to real estate. I mean, it's somewhat related. I've seen paper making company going to real estate. I've seen electricity company going to real estate. It's like, what? What are you guys doing? Anyways, I think when I bought it was last year, because last year I didn't buy. I gave the money to my parents-in-law to prepare for my wedding ceremony. I was like, all right, it's gonna be a year, might as well just invest it. This one looks cheap enough. I might still lose some, but the risk reward was there, so I just kind of put money in. I think it was somewhere around here when I put it. It was like 8. I think by the time I finished buying, it was 844 or something, or 864, something like that. So at an EPS of, what is it? Trailing 12-month EPS was 1.1. So 8.64. I was getting it. Oh, wrong. I was getting it at less than 8, I think. Yeah, 7.8. I was getting it less than 8 PE. That was pretty sweet. So as we were at the cash flow, so yeah, so very nice. Their PE keeps rising faster than their earnings rising. Actually, the main reason is that they're buying back their own shares. It's one of the few Chinese companies, very, very, very few Chinese companies listed in China does share buybacks. So they actually bought back some shares. Amazing. And because they were selling under book, by buying back their shares, they actually increased their book. This is like just fantastic. So, I mean, equity keeps rising and whatnot. And then here is the difference between CAS, I think it's just Chinese accounting standard, and international financial reporting standards. It's a little bit of difference, but nothing too much. You're looking at less than $1 million, so who cares? Because the revenue on this, I mean, let's just put things in perspective. The equity is 7 billion, revenue is like 9 billion, I think. Yeah, 6 billion. Yeah, revenue is 6 billion, equity is 7 billion, so who cares? And yeah, then you got these things quite useless. Non-recurring things, you can see there's some stuff that is non-recurring. A lot of that is government subsidies. These might go away. This is 66 million, but their income was something like 1 billion, I think, close to 1 billion. Yeah, around 1 billion. So 800 million. So you're looking at less than 10%, about 8%, and this is a 4 million. You don't really care. Here is their hedging against basically cotton, and then some random other shit. Total $60 million, $45 million, and $6 million in 3 years. So less than 10% of the gross profit. Sorry, net profit. So I choose to just not even think about it. Okay, so when they go to business summary, don't read this. You're gonna die. Just look at the numbers. 80% is for export. So if RMB goes down, it's potentially good for it. But because their cost is quoted in RMB, their revenue is quoted in other currencies. These things, like the translation is crazy. It smells very strongly of propaganda, like creating wealth, contribute to society, clothing the country. Clothing the country! You're selling 80% of your shit outside the country. Whatever. Ignore those. Every time I read those, I kind of get shivers. Yeah, so they had long-term equity investments, but only 100 million. And then they have some engineering material cost. Essentially, they were expanding into Vietnam, Cambodia, and Burma or Myanmar. for because the labor cheaper there. Chinese labor is no longer that cheap, and textile is very labor intensive. And you can see even with those efforts, their labor cost has been rising. Okay, here is something that's very useless. It's a bunch of subsidiaries. It's like most of these are 100% owned, so it's all going to be reflected in the consolidated statements. So who cares? It talks about its own competitive core business. Basically, it's a clothing company. It's a textile company. It has passed ISO, so you know that, and it's quite useless. And again, these things are quite useless. It says, "Oh, I do R&D." I'm like, okay, well, sure, that's fine. Okay, so here is the interesting stuff: revenue and cost. 92% is textile and apparel, so they focus on their own industry. They also either buy or sell cotton, probably because they had either excess or whatever, and they somehow sold some electricity. It's only 1%, so I choose to ignore it. Some other revenue, so it really doesn't matter too much. And then by products, it's mostly you have fabric and shirts. Percentage-wise, very similar compared to 2016. It's been very stable ever since they started introducing their own brand. Their brand never got too far, but it's doing all right. So where are they selling it? They're selling it mainly to Southeast Asia, Europe and America, and mainland China, as expected. And here is again, it's quite stupid. It just repeats itself. It has a gross margin, but you can see fabric actually has a higher gross margin. Shirts have a lower gross margin. Interesting, huh? And this is how much they produced. Mostly very stable, except things that are tiny where, again, in here it's very stable. And here is quite stable too. Their output grew a little less than sales, same here. I mean, eventually we'll have to catch up, otherwise you run out of things to sell. Your stock inventory, what they mean is, goes down. And that's been going down too. So yeah, so that's not nothing out of ordinary. Most of the cost of sale is textile, so as expected. So in here, basically as expected, we already saw the gross margin, so very useless. And this is another interesting table. So essentially it tells you who are buying. I don't know who SPT is, but I checked every one of them. So Olymp is Olymp is some clothing company that sells in Europe. And it is Olymp shirts. It is not public, I think. Or is it? Deutschland. Is there an investors relations? Maybe there's an English. No English. EN, yay! Investors? No. Oh well, there is nothing. Otherwise, it'll be cool. But the total they make about 18%, not the top 5. So SBT couldn't find any information. Tao is a clothing. It's a private company. It is based in Hong Kong, it basically does like OEM work. It produces stuff for other brands. Same goes for this. This guy is essentially Calvin Klein and Tommy Hilfiger. Look at that. This guy is Calvin Klein, Tommy Hilfiger, and this heritage brands. I never heard of heritage brands, but sure, why not? What do they have? Van Huysen, Isolde, Arrow. Never heard of any of those. Never heard of any of those. But that's quite famous already. Oh yeah, this Chen Feng guy is a OEM maker as well, and these are the people that buy from them. You can see Blooming, you have Lacoste, you have Patagonia, Barbie. Wow. Asics, Adidas. This is a Chinese men's clothing company. Not very high end. Those are the only things I recognize. And on top of that, I read that there's an article in this is some website in Italy. Basically says the textiles of LuThai from China to Italy. So it started listing the brands that was here, between which is you have Hugo Boss, Brooke Brothers, Burberry, Mark Spencer, Zara, and Bogi. I've never heard of Bogi, but whatever. So these are famous brands, and apparently LuThai makes these textile for them as well. So this is actually very important. If you think about the behavior of these companies, right? So the especially these luxury brand companies, or essentially their gross margin is going to be so high because most of that is in marketing and probably design, R&D or something, right? So what is the likelihood that they will abandon? Well, there's two things. First of all, like LuThai has no consumer brand loyalty, but on the other hand, what is the likelihood of these consumer brands, to switch suppliers? Because LuThai has been doing this forever. They have a decent quality, and judging by the fact a lot of these high-end clothing brands are using them, or using their fabric. So if they want to save like $2 per cloth, which is selling at, I don't know, per shirt, which is maybe $300, in order to increase margin a bit, why don't they just increase the price by 3 rather than trying to save on the clothing, on the fabric side? Because if you save on the fabric side, what if the fabric goes wrong? Then they have a lot more to lose than just by raising price for a little bit, because people are a lot less price sensitive when the price of the cloth goes to hundreds of dollars. On the other hand, if you're selling $10, $5 shirts or t-shirts in that case, then suddenly the fabric is going to be much of your cost. Then at that point, the retailer or the brand owner would start become more sensitive to the raw material cost. So I think they're in a pretty good place where it's unlikely they will get switched out. But obviously, if they're exposed to the expensive side of the consumers indirectly, then they should be more exposed to the economic cycle, but that I haven't seen that either, because if you look at 2009 or whatever, if we go a little bit down, I mean 2009 they did go down, but in 2008, but that's because of China. China had a crazy bull market in 2007, so that was a drop. When things were really bad, it was basically 2008 and then 2009, but they've been just going up since the end of that crazy bull run. So let's go back. So that's something, yeah, I think is very important. Like, who are they selling this to? They're not too much of a consumer-facing company. They have their own brand, but their brand is not famous. To give you an example, if you look at here in Taobao, if you search for shirts, none of this brands is owned by LuThai. I know their brands, but it's not showing up here. So yeah, their consumer-facing stuff is just a joke. My father-in-law actually bought a shirt. Actually, I bought a shirt and I don't want to wear it. I just gave it to him to wear, and then he says it's all right. It's on par with Tommy Hilfiger or whatever in terms of quality and fit and everything. So he's like, eh. But again, I don't know how to judge shirts above a certain threshold, that is. Alright, so their main suppliers, if you look at the suppliers, it's all very boring. You have power supply, some cotton, you have cotton, and you have cotton, and you have cotton. As expected. R&D, they just spend about the same amount of money. And here's the cash flow. So they generated 6 billion, which is very close, 6.5 billion, which is slightly more than their $6.4 billion in revenue, but it's going to balance out over time. And then they paid so much, and overall they had a $1 billion coming out of operating activities. That's very healthy. And you might see, oh, why is it decreasing? Because they paid a little bit more in terms of paying in operating capital. So your working capital will fluctuate, right? So, and in terms of investing, for some reason they have an income. I don't know what the income's from. And then they spend a bunch, 800 million. So total, they spend 700 million in investing activities. So that would be your factories in Vietnam, your factories in Myanmar, and stuff like that. And in terms of financing activities, they spent more than they got. Basically, this is the difference is mostly just either paying off debt or dividend. They pay quite a bit of dividend. So overall, they had a slight increase in cash and cash equivalents. But they had a decrease last year, but there's 100 million in the range of 100 million. That's 1/10 of their revenue. Well, sorry, 12% of their revenue, and 1%, 1.5% of their total net asset, equity. So investment income. So that's the one that I was wondering, like, what the hell was that? But it's $2 million. Who cares? Asset impairments, inventory. So that's cotton. You can't control that. 37 million or whatever. Some $12 million in non-operating income. Not very interesting. Then you have some their asset, the monetary funds. So they bought a bunch of money. So they have 600 million in monetary funds that they can't use, and they have 2 billion in inventory, and they have some 5.4 billion in fixed assets. So that's your PPE, property, plant, and equipment. I think that's that. So yeah. So then you get a bunch of pretty useless stuff. They talk about what. Look at this. This is some derivatives, but they're fairly simple. They're only exposed to basically power and cotton. So that's all very boring. So you can see they pay the same amount of dividend every single year. In 2015, they paid more. This one they paid less, but they paid the same amount per share. And the reason is that they actually bought back a bunch of share in 2016, which is fantastic news, because if you look at their range, where's the thing? 2016 is after the crash. So within 2015, right? So 2016, end of 2016, all the way always there is the it was much lower. So they did not buy in 2015, but they bought in 2016, and then they did not buy in 2017, and in 2018 they actually bought. They are currently buying, which is what I like, because they're buying under book. And then they've set a price cap for themselves at 9.9 or something, I think. We'll go into that later. So yeah, that's how much they paid, 5 RMB per share. About half of their earning, a little bit more than half of their earning paid out. Very nice. Cash cow. Behave like one. There are some related party transactions, very small. Okay, so now it's all very boring stuff. Let's go to the financial statements. Here it talks about their people. Like, I don't care. I don't care. Or what is this? Financial statements. Finally. All right. So that's cash. Here you got receivables, and you got prepayments and all that. Nothing's going crazy. They have some interest receivable, other receivables, inventory going up a little bit. Not really worried. Their revenue is going up too. So, and total current asset went up a little bit. So all these is pretty innocuous. The interesting thing really is how much intangible asset they have. Their intangible asset and a goodwill put together is about 500 million yuan compared to 7 billion in net asset. So that's quite a small proportion. And go down in terms of liabilities, they got some short-term borrowings, payable, advance from customers. This is good. This basically means their customers have to pay them before they take delivery. That means they really want their shit. Payroll, nothing is very interesting, and dividend payable. And if you look at long-term debt, there should be one that says long-term debt. Oh, they got a note payable, so that's 7 million. That's a tiny amount. Where is it? No, that's short-term. That's current, yeah. Long-term, there's no borrowing. They paid it off. They had 100 million, and they paid it off. They have no long-term debt. War. no debt. Well, they have some debt, but it's mostly short-term, and that mostly balances out between the short-term, the current liability and current asset. So that's what you have. Very, very healthy, robust balance sheet. Behave like a cash cow. Go, go, go. You don't really need to pay attention to the parent company's one because it's pointless. You just care about the consolidated one. Income statement, we went through this before, so I'm not going to go through again. One thing you might be interested is a margin. There's actually a thing that lets you look at the margin. Gross margin especially, has been slightly declining. If you look at those 28, and there was 32, and it was, it fluctuates between like 25 and 35, I would say. So you kind of have to pay attention a little bit. Yeah, everything else is pretty pointless. So that's good. And then as we looked at before, the cash flow is very healthy. So yeah, it's a very nice company. I like it a lot. Okay, so last thing I want to talk about is their buyback. So let's take a look. Their most recent announcement. I'm going to change it to 0, and that's their A shares, because B shares, they only publish essentially just annual reports. Well, quarterly reports. But here, they've got this thing. So they decided to buy back their B shares, and they're not dumb enough to buy back their A shares at a 32% premium. They decided to buy back their B shares. Very good. Oh, damn it. I closed it. Okay, this is going to be in Chinese, but essentially what it says, it's going to buy B shares at no more than 9.9 Hong Kong dollars per share. And it will buy back 8%, up to 8% of their float. I hope they go through with it. Now, they actually in China you have to keep publishing how much you have bought back. So since May, they have published 3 announcements. In this one, they bought back let's look at percentage. There's 0.1% of their shares, the first one. So in China, you have to report every 3 days, I think. Here, another 0.5, so now you're 0.63, and then 1.1, and that is 1.1 plus 0.63, so you're looking at 7.4. 1.74% of the shares were bought back within a few days, basically. So yeah, so this is a very shareholder-friendly company. Pays a dividend, buys back when things are super cheap, buys back at the correct shares, and a very stable business. I liked it a lot. So no wonder I bought a bunch. I intend to hold it until maybe it gets overvalued and maybe at least 1.2, 1.3 PB. If it doesn't go up there, I'll just sit here and collect my dividends. Ta-da! All right, that's it for today, and subscribe if you like this.